Yes, so people, we're back with another video. Today's video is a pretty simple video, but super important to, your understanding of smart money concepts and of sort of trading the markets efficiently, effectively. And that is liquidity levels. So buy side, sell side liquidity, what they are, how to identify them, and then how to apply it to your trading. We'll start off with a simple definition of what a swing point is. Swing points are essentially a pattern of three candles, a swing low is this on the left here, and it's essentially a low with higher lows to the left and to the right. So it could be a wick. So it's usually a wick. It could be a body, but usually a wick. So a low with higher lows to the left and the right. These three together are called a swing low. Swing high is the opposite. So you've got a high wick, protruding high wick, with lower highs to the left and to the right. Call this a swing high. Now, how is this relevant to liquidity? Well, this all comes down to the psychology behind swing points. So swing points are super important because of the stop loss position for going long or going short. So say we see this bearish candle, we see this bullish candle, and then we see another bullish candle straight after. Now, if we were to take a long position, we would often place our stop loss in line with the low of the candle which began the bullish trend. And so that would be over here. So our stop loss would be placed below this wick. And as a result, there would be a whole bunch of stop losses placed in line with this low, with this swing low, and that represents liquidity. Now, the opposite goes for buy side liquidity. So if we were to go short here, seeing these two bearish candles, our stop loss would be placed in line with the swing high, because essentially, if price exceeds this high, our bearish market trend is invalidated. That there's essentially been a break of structure, and so our theory behind the trade has been invalidated, and so we'd want to cancel our order. So the summary of it is that we've got a whole bunch of stop losses below this low and above this high, so in line with the swing highs and the swing lows, and those represent liquidity. Now, smart money traders like ourselves, we pair our orders with these liquidity levels as they are magnets for price action. You could say that sort of institutional capital fills orders by taking the opposite side of stop losses placed at these swing highs and swing lows. And because of that, these levels are magnets for price action. And so we watch them very carefully. And a lot of the time, we time our trades, or we take our positions in line with where the relevant liquidity levels are. And so with that, we've covered what are swing points. We've covered the psychology behind sort of liquidity swing points. And now we'll just move straight on to examples of liquidity levels on the chart. So this should be a pretty quick video. And hopefully the explanations are all super concise, because I found that sort of on YouTube, on the internet, a lot of the explanations are super long-winded. And I didn't really like that when I was starting out. And so hopefully we could sort of make this video below 10 minutes, and that'd be great. So we'll go quickly to the GU chart, so GBP USD. Now over here, we can see that we've got a low here with a higher low to each side. And so this over here is the liquidity level. So this is sell side liquidity. But then we've also got, let's see the next candle. So we've also got a high with lower highs to each side. And so this here is our buy side liquidity. So we've got our buy side liquidity, we've got our sell side liquidity, and we could go candle by candle to see if these liquidity levels get taken out, or if they stay within the range and new liquidity levels are formed. So new liquidity level over here, we see we've got new buy side liquidity with a lower high to the left, lower high to the right. And so this is our new, most recent buy side liquidity. Let's see if anything comes up for the sell side. Okay, so we can see that sell side liquidity is formed here because essentially we've got higher lows to the left and to the right of this bearish candle. And so this is our updated buy side liquidity, BSL, and this is our updated sell side liquidity, SSL. And essentially we're on the 4 hour, but you could zoom out in your chart and find a lot of really prominent highs and lows that could represent potential magnets for price action. For example, here we've got a really prominent high with lower highs to the left and to the right. And so this would be a really prominent buy side liquidity level. And the same goes for this low over here. Very prominent low with higher lows to the left and to the right. And so this over here would be a sell side liquidity level. And I think you guys get the point in looking for buy side and sell side liquidity levels on the chart. Sell side liquidity, buy side liquidity, sell side liquidity, and so forth. Now, that covers examples of sort of liquidity levels on the charts, how to look for them, how to find them. Now, what are the types of liquidity levels to look for? So there's two types of liquidity levels that I will often look for on the charts. The first would be, as mentioned before, the prominent highs and prominent lows. And the second would be equal highs and equal lows. And the reason for equal highs and equal lows being considered as sort of really prominent liquidity levels is because it's a level where the stop losses have been respected. And so there is an accumulation of orders here for people who trade trend lines. So we can see here that there's equal highs. So that there would be a liquidity level we'd be looking to sort of watch or monitor. And we can see that that liquidity level got taken out. Where else can we see equal highs and equal lows? So these liquidity levels over here. So we've got two highs that are pretty close to each other. We call them equal highs. That's something that we look at pretty carefully. We've got a lot of highs here that are consecutive. And so we'd call these equal highs. And really, you can look through the chart. You can see, for example, that there's an accumulation of orders here with this low being respected. But we could also call them equal lows because there are a lot of lows here that respected this price range in general. And so overall, you get the point that we're looking for prominent highs and prominent lows on the charts, but also for equal highs and equal lows that show levels of price that have been respected and that price will tend towards. Now, what are the liquidity levels that are most relevant to your trading on the charts if you sort of are looking into smart money concepts and that sort of thing? Well, for me, I'd be looking at firstly the weekly time frame. So we zoom out on the chart here, we clear all sort of drawings. The first liquidity level that is of interest to me would be the weekly highs and lows. So I'd be looking at this price level over here as a level to be respected. You know, your weekly high. And then this price level over here to be respected as a weekly low. Now, we haven't marked this high out as our liquidity level for weekly high because we haven't taken out the previous week's high. And so that liquidity level still stands and is valid. But the low for last week was taken out. And so this is our updated liquidity level for the weekly low. So we'll call this weekly high. And this is something I'll always mark out at the start of the week, weekly low, as it's often a magnet for price action. I then switch over to the daily time frame and look for my daily high and daily low. Obviously, it's a Sunday today, but you know, if we were in the middle of the week, we'd mark out the previous day high and the previous day low, as they also are magnets for price action. Price will tend towards these liquidity levels to look to fill orders. So we can label these as daily high. And this would be our daily low. So your previous day high, your previous day low, your weekly high, your weekly low are levels that you would be monitoring quite closely as they are magnets for price action. And the final one will be your session high and your session low. So for that, there are actually indicators. So if you look here, session high and session low. So just choose an indicator and uh, let's see if we can. All right, so this isn't working for some reason, but essentially, I've got too many indicators on my chart. Let's see. All right, we're giving up on that. Oh no, here we are. Okay, so the indicator is showing. So you can see that, for example, over here we've marked out our session high and our session low, and that would be an area of price that usually would be respected, and price would be looking to tend towards to fill orders. And that pretty much summarizes, the liquidity levels that I'd be looking for, um, sort of during my intraday trading. Your daily high and low, your weekly high and low, and the session high and lows. And that depends on what session you trade. I trade London session, because I'm based in London. But if you trade New York AM, if you trade Asian session, then you would mark out those levels. And I hope that covers it. Pretty quick video, I think. Nothing too complicated, hopefully. Um, so yeah, and with that, we've covered what are liquidity levels, the types of liquidity levels, examples on the charts, the psychology behind swing points and why they're relevant, and what are the liquidity levels that I look for in my trading. Please like, subscribe, all that good stuff. That would sort of be super helpful to me. Hopefully, we'll be doing sort of 3 to 4 videos per week from now on. And yeah, let me know if you have any questions in the comments. Please, please, please write them down. Any feedback, much appreciated. Obviously, I'm still new to YouTube, but I have been profitable for around 18 months now. Or trading for 18 months. I'm profitable for 10 months. And yeah, look forward to seeing you all in the next video. Take care.